Hey, Devin, is there anyone else on the attendee list I should bring in? James Foster, maybe? Paul Kane? Paul Kane?
You're also muted.
It's okay. I can read your lips.
All right,
You're fine.
Paul Kane, please. And hi, Paul.
Hey, good afternoon. I'm also going to have Ryan Stricker with me to present. So when he pops on, if you can add him, that'd be great.
James Foster is not one of yours?
Nope. I don't know who that is.
Or Diane? Okay. That's probably ours. Gersh.
And I'm on, Tom, if you can see me. It's Melissa Youssef. Or hear me.
Gotcha.
I'm going to stay black, people, for the meeting, just due to where I am today.
Sounds good.
And Tom, it does look like Ryan Stryker's on there as well.
Ryan. All right. He should be coming in now.
Do you want to promote Mark?
I did, but I don't know if he wants to become a panelist. I could try again.
Okay.
Yeah, he
Also,
declined. He's going to stay as an attendee.
I'm hearing from Jessica Buell and Gilda Yazzie. They're logging in now. They're looking for the invite. I just had to. I told them to go to the website and click on the meeting, and it's there.
I think that's the right
But
action.
they're coming. So just we can wait a little longer. Clearly, for the mayor to start the meeting.
Yeah, I did see that some folks were trying to join via Teams.
Yeah.
So I let them know that Zoom is the platform.
Yeah, and Kyle just sent a link for all the counselors, so hopefully they'll join us soon.
Excellent.
Olivier wants to stay as an attendee. There's Jessica. To get the meeting going.
Okay, great.
Yeah, Olivier. Hey, Olivier, I've unmuted you, but for roll call, I think I need to promote you to panelist. Yeah, he's on his way.
Great, thanks. We need to get a council majority before we start.
I'm online.
Yeah, I think we have Dave's in Chambers, me, Melissa, and Olivier. And then Gilda said she was going to be on a phone. So if you see a phone number, that
Okay.
could be Gilda.
I'll keep an eye out for that. Hey, Faye, does Ben need to be a panelist? Does Ben need to be a panelist? Okay.
I'll give it one more minute to wait for Gilda just in case, but then I'll call him. Okay, I think we'll call the meeting to order, and then if Gilda pops on, she can jump in. Good afternoon. It is 2:33 p.m. on June 25th, and this is a city council special meeting. Can I have a roll call?
Counselor Woodruff,
Here.
Mayor Buell,
Here?
Mayor Pro Tem Yazzie,
Gilda, you're muted.
for the record, Gilda Yazzie is there. She
Here.
is. Thank you. Counselor Youssef,
Here.
Counselor Basmans.
Present.
Excellent. Item 2, discussion items. 2.1, presentation and review of the 2023 annual comprehensive financial report. Turn it over to Devin.
Great, yes, thank you. And good afternoon, Mayor and Council. Give me 1 second to share my screen and then I'll turn it over to our auditors as well. Let's see. Okay, great. They all are seeing my presentation. So yes, good afternoon. I'm Devin Schmidt. I'm the CFO for the city of Durango. We also have Eide Bailey in attendance today, Paul Kane, who's our partner with Eide Bailey, and Ryan Stryker, who is our manager with Eide Bailey. The reason for the presentation today is to hear from Eide Bailey, our audit firm, on the 2023 annual comprehensive financial report. Before I kick it over to them, I did want to take this opportunity to talk about our continuous improvement cycle with our annual comprehensive financial reporting. So if we kind of start with looking at 2019 and 2020, that was our first ACFR kind of following the fraud. We did have some material weaknesses. We were going through an additional forensic audit. That was issued in March of 2021. Our 2020 audit was issued October 26th in 2021. We did have a material weakness. An additional internal controls audit was conducted at that same time. And then flash forward a little bit to our year 2021. We issued September 14th, 2022. We did have 3 material findings. We still had an unmodified opinion, and we did get back on track with receiving the GFOA Award for Excellence in Financial Reporting. Last year, we issued July 18th. That was the first time that it had been completed on time since 2018. We did receive the GFOA Award for Excellence. We had a GASB 87 implementation. That was one of the bigger implementations that our team has gone under. We did have 1 material finding, and we did still receive an unmodified opinion, which is the best you can receive. In 22, we really spent a lot of time working on cross-training, building a sustainable team, and staff development, and really being able to complete that ACFR internally. And what we're here to talk about today is our 2023 annual comprehensive report. I want to highlight for council that we did have no findings this year. We have an unmodified opinion, which again is the best you can receive. We've really built an amazing cross-trained sustainable team within our accounting staff, where the folks that are working on the ACFR are looking for different ways that we can continuously improve. And 2023 is really a testament to that. Having this presentation before you today. We will, of course, submit to GFOA for the award and excellence in financial reporting, but I just wanted to take an opportunity to really highlight the fact that we didn't have any findings, and that's the first time since 2018 that this team has had that. So with that, before I turn it over, I did want to just give a huge shout out and thank you to our financial services team. Diane Gersh, our compliance and reporting manager, Helen Bruckbauer, senior accountant, Heidi Wise, our accounting manager, Adrian Lyon, our senior financial services specialist, Teresa Hill, our accountant, Christina Leos, financial services specialist, Rhonda Cundiff, finance analyst, and Kim Skinner, financial services analyst. This team really came together this year, and just none of this could be completed. And it is a very huge lift that our finance team undergoes every year getting this report pulled together. So with that, just wanted to pass along my sincere appreciation to our team, and I'll pass it over to Paul Kane. So let me stop sharing, Paul, so you can take over.
Awesome. All right. Thanks, Devin. Can you see my screen? Perfect. I don't know how to use PowerPoint while I'm in Zoom, so I just did a PDF of my slides, and I'm just going to click and change pages as we talk. So first off, thank you for the introduction. I thought that was a great visual, just the steps and each year getting better and better and better. And I've been here since 2019. I was a manager with Ed Bailey. So I was here for that first year when it just felt like the audit just went on forever. You know, it was like 15, 16 months after the end of the year. And it basically went through 3 audits in 1 year period to try to catch up, and just watching the growth of the accounting team and things getting done more timely and more efficiently and more effectively, and now having no audit adjustments and no findings this year. It's been awesome to watch the growth of the accounting team. So I'm Paul Kane. I've been a partner with Ed Bailey now for 4 years. Been with our firm for 21 years. Started your audit as a manager, took over as a partner 4 years ago. So this is my 4th year partnering your audit, and said it's been a pleasure to watch things get better as we go. And that's a testament to the team. They were amazing to work with again this year. What I'm going to go through today is just a summary of the audit and the opinion, high level financial statement summary, just a few results. Ryan Stricker is with me. Ryan, do you want to introduce yourself real quick?
Hey, everybody. I'm Ryan Stricker. I've been on Durango's audit team for the last 4 years, and kind of took over the manager in charge of it this year.
And Ryan will be talking about our single audit. So it's going through and auditing your federal funds and give the results there. Required communications talks about a letter that we'll issue when we're done tomorrow. Well, we're dating things today. The audit's been done for a few days. We're not dating it until you've had a chance to review the financials and accept them. So that was the point of this meeting. We appreciate you taking a special meeting just for us to be here and talk to you today. We'll try to keep it moving and get on with all of our days. So moving forward, I'm going to start with the financial statement audit. This is page 12 to 15 of the ACFR, and it's our audit report. This is really all we contribute to the document besides reviewing it. This is our 4 pages. It is our audit opinion. This is a clean, unmodified opinion, the very best that you can get. I'll just break down what's in the opinion really quick. The first page of the opinion starts with our audit report and our audit opinion. So the first paragraph talks about what we audited, which is the financial statements of the city, and it goes through governmental activities, business type activities, all your major funds, all your aggregate remaining funds, etc. The second paragraph is our opinion, which says that your financial statements are fairly presented in all material respects, etc. That is the best that you can get, as Devin said. So moving on through there, the basis for that opinion is the third paragraph, which says we followed all applicable required audit standards. We were independent. We met all ethical requirements and responsibilities in performing our audit. The fourth paragraph is new this year. It's only there this year. It talks about the adoption of new accounting standards. Devin mentioned 87 last year, which was bringing leases into your financial statements. This year, 2 other GASBs were effective, which were GASB 94 for public-private partnerships, the 3 Ps, and 96 for subscription-based information technology arrangements. So that one's basically bringing any software subscriptions that are longer than a year onto your balance sheet, just like you would with leases. So you have a right to use that software. You have a long-term liability to pay for that software. They come onto your balance sheet. The process to adopt that was going through every single agreement that is a software type agreement, which you have a lot of them. It was determined the impact was immaterial. So they went through the process. They, as in the accounting team and management, went through the process. to determine what that looked like. I think the amount was about $300,000 in total would have come onto your government-wide financial statements. And just the cost of implementing that, adding it into the financials, adding all the disclosures wasn't worth doing with it being such an immaterial amount to those financial statements. So they did go through that process and evaluate it. And so that's one of the past adjustments we'll talk about at the end, but it was just a decision not to look at it and add it. So moving on to the second page, talks about management's responsibilities, which are really to prepare a fair set of financial statements and also determine if there's any going concern issues with the city. None were identified. And then auditors' responsibilities, which really are to perform an audit in accordance with generally accepted audit standards and government audit standards. We follow both. And we've really bulleted out what that means there. So we exercise professional judgment, we maintain professional skepticism, and we understand controls relevant to designing our procedures. We don't audit controls, or we test controls if we deem it to be an effective procedure, but really audit standards require us to gain an understanding of those controls, walk through those controls and make sure they're in place, and design our audit procedures based on that understanding. That basically says that. The third pair and fourth pages really go through everything else in your document. So your required supplementary information is not audited. That's your MD&A in the first section before your financials. After your footnotes, there's other required supplementary information related to your pensions. And then budget to actual schedules for major funds also go up into that section. Again, we don't audit that information. The opinion says that. Other information we give in relation to opinion on, which means that we compare that information to the financial statements to make sure it's reasonably presented in relation to what we did audit. And so that's just all that other combining and individual stuff in the back, your local highway finance report. And then we do not audit the introductory or the statistical information. The fourth page of the opinion just gives some information. There are some comparative totals in those back statements, which means 2022 columns compared to 2023. So we had a paragraph that just say we audited that stuff before, matches what we audited. And then there's an other reporting required by GAGAS, which is generally accepted government audit standards. And that reporting is related to the internal control report and single audit report that Ryan will cover. So moving on to just some key financial highlights. This is from the first page of the MD&A. Just some key things that I thought were to point out. So the city's assets and deferred inflows exceed its liabilities and deferred outflows by $409 million. So that's the net position of the government at 12/31/23. Overall full accrual net position. So for the year ended 2023, well, this is your net income, not your net position. This is your change in net position. It was $21 million. So that was your net income for the year compared to 23.6 last year, which went down 2.9 million for the year. Governmental funds went up a little bit, went up mostly, not a little bit, 21 million. Enterprise funds, just the business type stuff, was just slightly down from last year. Fund balance of the governmental funds increased by $4.5 million, like 9%. That's a really good increase. And the unassigned and assigned fund balances for general fund was 13.9. So 27.5% of the general fund expenditures for years and unassigned. This page, I like to bring this page in when I present. Like I said in prior years, it just shows a good comparative picture this year versus last year. The draft you had, the 2022 column, doesn't match this. It was actually the last year's version, so this has been updated in our subsequent reviews since we got you a draft to look at. But just the 22 columns were updated. This is last year's financial versus this year's. You can see assets are up about. Go to my notes. Assets are up about $16 million. Went from 469 to $485 million. The majority of that is an increase in your capital assets, current year projects, current year expenditures, from 331 to 345. Cash is up slightly, and then your airport joint venture went from 35 million to 38 million. So a $3 million increase there, just related to the net, your half of the net income of the airport. So that increases your investment in the airport and that joint venture. Your liabilities are very consistent year over year. They're down about 400,000 overall. So your assets are up, 16 million, your liabilities are down. a little bit. So your net position obviously increased an awful lot, which is this next slide just kind of hits on those key things. The net position is your retained earnings. Your total net position increased $21 million to 409 this year. The governmental activities piece of that was really what grew it. Your investment in capital assets, so that's just the component of net position that relates to capital assets, remains at about 70% of your total net position for both years. So just really strong positive net position balances in both governmental and business type activities. Strong growth year over year, growth in your unrestricted. Everything's going in a positive direction. So this is really your income statement for the government-wide financial statements. Here you can see that change in that position. So there's a $21 million increase from 388 to 409. Your revenues are up, about $14 million. Your expenses are up about $17 million, which really is like growth across almost every functional program. But the biggest was in public works, related to just your current projects going on, mostly with the housing things and stuff like that. So, but really you have a lot of growth across mostly every expense category, which slightly offset that increase in revenues. The biggest increase in revenues was operating grants. There's about a $4 million increase for the housing stuff. So we talked about that here. The change in that position, total revenues increased about $14 million. Investment earnings, 2.6 million, 8.6 million in intergovernmental revenues. So 4 million of that was the SLRF money and the HUD money that went into this Best Western project, low-income housing growth. And the biggest increase in expenditures was public works. So overall, your net position increased by 21 million. I think this slide's a really good picture of just your trends in your net position since we've been doing your audits. So just looking at governmental activities versus business type activities. I mean, 222 million in 2019 to 288.8 in 2023. So that's really great growth. Of that, unrestricted is 110 million in 2023 versus 101 million in 2022. So there's a lot of flexibility with what you have in your net position right now. Lastly, your significant note disclosures. I will not read these, but these are just what I think are the key disclosures to dig into. If you want to understand the accounting policy of the city, it's all in note 1. The breakdown of your cash and investments and what you're holding right now is in note 3. Capital assets and the change year over year, you can see what made up that $14 million increase is in 3D. Summary of your leasing activities in 3G. Long-term debt. So the biggest change there, debt basically stayed consistent year over year. Your pay down in debt for the current year was offset by an increase in that energy performance leasehold, energy performance lease contract related to the solar panels. And all the pension stuff disclosed in note 3I, and then just contingencies in 4B. And that is it. Before Ryan jumps to the scene, let's just do questions at the end. So let's let Ryan dive into the single audit now. Go ahead, Ryan.
Thanks, Paul. So I'm going to redirect your attention to the single audit report, which we call the Yellow Book report. Paul alluded to this a little bit before. This is a report and not an opinion because we do not test the controls. However, we are required to obtain an understanding of controls while we're planning and performing our audit, and then communicating any findings through material weaknesses or significant deficiencies at the conclusion of our audit. The good news is, as has been alluded to a couple of times, we have not identified any significant deficiencies or material weaknesses in internal controls this year, so no findings. So then pages 3 through 5 are your actual single audit report that describes how we audited the city's federal programs. There were 2 single audits performed in 2023 over state and local fiscal recovery funds, which we abbreviate to SLRF. and the community project funding, which was a $3 million grant issued through Housing and Urban Development for the acquisition and transition of the Best Western Hotel into low-income housing. Again, we did not have any findings related to these programs. We audited the compliance of the federal programs through the Office of Management and Budget's compliance supplement. And we noted no non-compliance in 2023 related to your federal programs. Then on page 6, you've got your SEFA, or your schedule of federal expenditures. This kind of summarizes all of the city's federal expenditures. If you look through it and you see, well, excuse me, let me back up. A single audit is required if you spend over $750,000 of federal awards in any given year. In 2023, you spent about $12.5 million versus about $18.9 million in 2022. That decrease was driven by the Airport Improvement Program, which had a significant amount of expenditures in both years, but there was about an $8.8 million decrease in expenditures in 2023. This was related to one project in particular. It was the 321 runway rehabilitation and lighting project that incurred about $10 million of expenditures in 2022 versus only about $376,000 of wrap-up expenditures in 2023. There was also a $2.4 million decrease in Department of Transportation funding in 2023 as projects finished up again. These decreases were offset by the $3 million increase and the $1 million increase related to the acquisition and transition of the Best Western Hotel into low-income housing as a project. So on page 9, you'll see a good summary of kind of all of our audit results as it relates to both the financial statements and the federal awards. The important thing to note is that we issued an unmodified opinion on the financial statements. There were no findings at all, and there was no non-compliance noted with regards to federal awards or the financial statements. The summary continues with the 2 programs that we tested that I discussed before. SLFRF was tested in both years with no issues. And again, no findings in this year.
So one thing to jump in here on, Ryan, is the qualified as a low-risk auditee piece. You're not a low-risk auditee right now. You're a high-risk auditee. Your high-risk auditee means we have to cover 40% of your expenditures in our testing versus if you're low risk, we have to cover 25%. So to get you down to low risk, if you can go one more year without a material weakness, then you will be there. So really, it really comes down to that. Do you have findings or not? If you get the data collection form filed timely, which you will, you have 30 days to do that. Beyond that, we can go one more year without material weaknesses. So next year is still going to be high risk, but after that, you can get to low risk. So just wanted to point that out.
Thanks, Paul.
Yeah.
I think the next 2 slides basically just summarize, again, what we've kind of said already. No financial statement findings, no non-compliance or single audit findings noted either.
Those are easy slides to get through.
Yeah.
All right. Thanks, Ryan. So just a quick update on the airport. We also audit the airport since your city's accounting team is responsible for the accounting for the airport. So it's part of our audit. That audit is done. It's ready to be issued as well after today. So we don't have a slide. We're not going to present that to you today, but just so you know, it's done. There are also no findings over that audit. And it went very well as well. This last slide, this will be the letter you get that we issue after today. It'll be dated today. It's a required communication to governance, and you are the governance of the city. So it basically, what you will find, highlighting the key points here, we did comply with professional standards, including all ethical requirements. The city adopted 94 and 96, which I talked about. Here, we do list the significant risks identified by the auditor during planning. They're not specifically risks related to things that happen during testing. They're things related to just overall audit risks when you're going through planning an audit, such as revenue recognition or the management has the ability to override controls, things like that. So you'll see those risks listed there. They're consistent with what we've had in the past. And that's just really what we use to drive some of our procedures. Sensitive disclosures are identified in this letter, and I did a slide to tell you what I thought were the most sensitive disclosures. There were no audit adjustments. There were 3 uncorrected misstatements, however. Those 3 did not result in significant material weaknesses, but you'll see what they are. A small accounts payable entry for $21,000. The deferred grant revenue related to the housing fund is slightly overstated. It just needs to be adjusted to match expenditures of those dollars. But these obviously were not material. And the third one was the CBITAs that we talked about earlier as well. And lastly, there were no disagreements or significant difficulties with management. Just real quick, just talking about what's coming up. There's been some really big GASBs. 87 was huge. 96 was big. In the future, accounting changes and error corrections next year is really only applicable if you have an accounting change or an error you need to report. They're just simplifying the reporting mechanism for that type of activity. Compensated absences, the disclosure will be easier now. But right now, you have to disclose what's the beginning balance, what were the additions, what were the deletions, and what's the ending balance. Now you can just net the change. So you don't have to go through and, a lot of governments jump through a lot of hoops to try to figure out like how much did we add or how much did we use. And so that's just going to simplify that footnote. In the future, 103 is going to change some stuff for the financial reporting model. So that's really the next big one that will impact management, but that's a couple of years away. And with that, we are ready for questions.
Excellent. Thank you guys so much for the presentation.
Absolutely.
Yeah, council, do we have any questions? If you want to use the raise hand function, and then I can call on you that way. No questions from anyone? There you go, Melissa. Oh, just kidding. Yes, maybe. Counselor Youssef.
Yes, sorry. That's hilarious
good.
working from my phone. I just wanted to thank you guys for the presentation. Thank you for your audit for the city of Durango. And I kind of wanted to ask staff, I have a couple of questions. I first wanted to ask staff and the auditors kind of what you think some of the most crucial steps you have taken to allow us to get to this point after so much work of no material findings. So what are some of the controls you put in place? What are some of the steps you've taken to avoid these errors that we've seen in the past?
Do you want to take that, Devin?
Sure. So I think I talked a little bit about it in our presentation, but making sure we have the right folks in the right places that are in the finance department. So we did make some changes. We used to have an assistant director. We don't. We now have a compliance and reporting manager, and we now have an accounting manager. And so those folks are really able to focus on the ACFR and our compliance throughout the entire year, while the accounting manager is focusing on more of the day-to-day and the monthly operations. I think the cross-training that our team has done has been really impactful and helpful. And then, starting in January, we have an audit meeting weekly, and we have that until we are done, until, we've got this sent off to the auditors, and until, we're really at this point, I think I canceled it maybe last week or the week before that. But I think just having those open lines of communication and then those two separate sides of the house has been really impactful and helpful. We also have folks on the team. Our senior accountant has been really invested in working on the GASB implementations. So making sure that we're getting those GASB implementations once they come out, instead of trying to implement them when we're in the middle of an audit season. So just being proactive with the work that we're doing. We've also, as a department, few years have really worked with all of the other departments on the ACFR and when we're doing capitalization of assets, for example, we're reaching out to Tony Vicari and saying, hey, what is the useful life of this asset? And so really just having that large partnership with the departments has been really helpful. We have also put some items in place where, we have earlier cutoffs for some things where we're trying to get the year closed sooner so that we're able to start the reporting sooner. And so just, it sounds really simple, but just those communication lines and really working, leading the whole team together, I think has been really impactful.
I'd add on too. I think that, when you have issues, you reach out to us too. Like, I think there was multiple times, in the fall, early in the winter time, you're not just like, I think we have a relationship in a way where I try to do this with all my clients. Questions are free. We're not ever going to charge for asking questions all year long. If you have a question, reach out. I think it makes it way more efficient at the end of the day when you know what you're running into, those big issues. So that the lease purchase agreement, we talked about this in October, November when you were going through it, how to account for it, but some different things about that. So when they're running into issues throughout the year, we're talking, and I think that helps eliminate errors at the end of the day. If you have questions, you don't just guess, you try to figure out, you do your research, you try to figure out what needs to happen. I think, and in the past, you've hired consultants, you've worked with others outside of us as well to try to get things right. So I think, and you don't just rely on people to do it and not understand what they're doing. I think, Devin and Diane and everyone there, like learning from those consultants and picking up what they're doing and not just paying them to do the work and taking that and applying it themselves, I think I'm seeing them do that over the years very effectively. So it's a couple more things I would add.
Well, I just as a counselor who was here during the embezzlement and saw the findings of that and the transition of where we've come to this point where we have no material findings, even to the point where we, if we can repeat that again another year, we even get to the point where we do, a thinner, if you will, audit slice, which concerns me in some ways after where we've been. I'm not totally sure I want to do that. I like the deep, large audit still. So, I guess I have a question for you, which is how often do you see audit findings, with no presentations for your clients of a community kind of our size and budget?
To see no findings within an audit, how often does that happen?
Yeah.
Gosh, it's hard to say. I don't know. I issue, a lot of these every year. I'd say we have findings more than we don't. I don't know. I'd say it's more rare to go without a finding, I think, especially because especially with all the federal programs you have and all the different, GASB is hard. Governmental accounting is hard. There's so many things that, you can mess up just accidentally. You like not even know. It's like working with the state a lot and stuff. And there's just so many things that it's just like, wait, even in the state, like, I didn't even realize that was even a rule. You run into so much like that you just kind of, it's hard. I'd say more often than not, there are findings, but there's definitely a few audits every year where we don't have findings. It's hard to say. Does that answer your question?
Yeah, it's very helpful. I just was curious. I appreciate it. Thank you all for your answers. Thank you.
Absolutely.
And the presentation.
Absolutely.
Any other counselors have any questions? Counselor Yazzie.
Hello, Gilda Yazzie, counselor for a little bit over a year. And I find that this process from going from the fraud findings and then coming out with no findings is just incredible. And I'd like to thank you for the guidance you've given to our team and our financial team for doing all the hard work to make sure that the city of Durango is upfront about what they're doing with our accounting process. But anyways, thank you so much. That's all I wanted to say. Thank you.
Awesome. You're welcome.
And Counselor Bosmans.
Yes, thank you. I have a couple of questions. I also want to thank you for the presentation and getting this audited financial report completed. I think that's great. I also copy what Councillor Yazzie was saying in that we have made good progress in getting these reports done. And no findings is even better. When I looked, I just screened over the documents. It seems we continue to have significant fund balances, which is good, but it's also paid for by taxpayers. But what was the total fund balance for all the funds combined? I think sometimes you call it, I think last year it was more called the total unrestricted net position.
So it's net position is what it's called for the government wide. It's called net position. If you go down to the fund, it's called fund balance. So GASB even made that confusing, where there's two separate names for the same thing. But government wide full accrual statements, your overall counting everything is $409 million.
Okay, because I see later in the report 110 million. If you do the comparison between in the report itself.
The 110 million is the unrestricted component of your net position.
Okay.
So like net position is like your retained earnings, and of that, 70% of that is just like your investment in fixed assets. So beyond that, the rest is either restricted or unrestricted. But the unrestricted component, it's 110 million.
And I think that went up another 9 million. And then is that about the best comparison to the internal accounting system where we use fund balances, that number?
Yeah, I mean, fund balances essentially roll up to net position. There's a few things that are different between like the fund statements and the government-wide statements. So it's essentially the same thing, but there's certain things in your fund balance that get adjusted to your net position. So your fund balance doesn't include fixed assets in the governmental fund statements, and you add those only at the top level statement. So that's a big change between the two. If you were to compare like fund balance of the fund statements compared to net position, the net position is including a lot more activity that's basically not reported in the funds.
Yeah, because there's another position that's called cash and cash equivalents.
Yeah,
which is 83 million, and so that's interesting. And the reason I mentioned this is because when the budget was made for the year 2023, so that we did that in 2022, and that was approved by a majority of council, the ending total fund balance was, I believe, 68 million. So whether we take 83 million or 110 million cash equivalents or the unrestricted net position, we are off by what is that, between 10 and 30 million dollars. And so that is always a concern for me when we do budgets, because we're quite unrealistic. Then on the on this same topic, and I'm not sure what the intent of this meeting is. Is this the meeting where we're going to approve this or accept this financial report?
I believe so.
Okay, because this is another comment. It's not for you as the auditor, it's more for us as a city and a government.
Yeah.
But councillors received a text message on Friday afternoon that the financial report was completed. And yesterday I received an email with a link to the agenda for the meeting today. And the reports, I'm not sure how other councillors feel, but with such short notice and not enough time to review such a complex document, it seems that the city council, which is elected and supposed to be representing our community, that the city might see us as a farce and a rubber stamping body, because I can tell you that I have not been able to go through this detailed report at this point. So.
Well, Councillor, when you look at an external audit, it's not something that the council approves. You've hired, the auditors hire to you, and the auditors present their audit as an independent audit. And that is what this is their independent expert advice of the audit that they have done and completed and have provided you the report in which we then file, which is similar to what we've done in previous years.
Yeah, so we're basically saying we accept without looking at it. It's okay. Thank you.
Councillor Yazzie.
I know that it was a little bit short notice to get this audit to us, but I took the opportunity yesterday to get it printed out, and I spent a lot of yesterday and then this morning reviewing the document, because it's hard for me sometimes to look at 200 pages on the computer screen. But, you know, I think it's enough time to read through these briefly. And I say that only because I did go to business school, so I already know what a lot of the terms are and what a lot of the charts are. But yeah, so I thought it was sufficient time. Thank you.
And Dave, I can't really see you. I don't know if you want to chime in or you're good. Good. Okay. So Gilda, do you have anything else to say, or are you?
No, I'm done. Thank you.
Okay, great. Perfect. Okay, I'll say thank you, Devin. It's amazing the progress we've made over the past 4 years and whatnot. As a reminder, we can't like review the documents and change anything in them, as we're not the auditors. And so the purpose of council is to accept the audit. And if we don't accept the audit, then we wouldn't get it in on time, and we would be out of compliance and get into a whole world of trouble that way. So anyways, thank you everyone for your hard work on this. And then do I need a motion to accept it? What do we need, Devin?
No, I think it's accepted. We've taken it. It's an external audit that comes from the auditors. And so I think you get into some very interesting places if we try to change or modify an audit that is supposed to be independent and external. That's the reason that you hire auditors that have their CPAs and expertise in governmental auditing. So we appreciate their work. I just want to say thank you to the staff for their hard work and seeing that the progress that we've made. Thank you for Eide Bailly for continuing to help allow us to ask those questions in the middle. That helps us get prepared and continue to being in the solid financial footing and setting that we're in. And it's a very good appreciative of that. And then just really appreciative of the partnership that we have, and look forward to continuing to progress and have continuous improvement in our financials.
Absolutely. Thank you for having us and allowing us to work with you. Hope you all have a great day.
Excellent. Perfect. And we will adjourn the meeting at 3:15 p.m.
Thanks.
Thanks so much. Thank you.
Bye.
Bye.